What's happening, guys? We have the last Sunday video for February, and we're right into March. I feel like February flew by. It was the best month so far for me. January was a little bit of a slow kind of grind, and then February was just fireworks pretty much every single day, which no complaints. I think the secret has been just not having too much of a bias, going with the flow, coming in and just going with the flow. There's been probably half the days each week I come in, there's an A+ setup type situation. A+ to me is something that's, overextended. It's gapping up. It's got that parabolic move. I'm ready for it. I react to the action, and it does what I expect. Then the other half of the days has been hands off, and that's something that I have not been great with, in years past, where usually you come to the market, there's not really much going on, and you still press anyway. You still try to find it. You still push off the open. And what happens? You get into a position, it swipes up, you're on the wrong side, and your blinders go on. You miss all these other trades that are setting up perfectly. 9:45, 10 a.m. plus, 11 a.m., because you decided to push buttons right off the open and commit to a position that wasn't really even in your wheelhouse, but you did it anyway. And instead of having a clear mind and a clear, kind of vision of what's out there, you're just right here on this one trade trying to figure out how you're going to get out of this position. And a lot of times it's not even that you're upside down. It's just you're trying to force a trade that that didn't have proper edge, and because of that, your blinders go on until 4 p.m. Bell rings. You got out, you just wasted your entire day. So that is one big change that I've been making over the last couple of years, where if it's not there, and that's the good part about the broadcast every morning, 8:50 a.m., I get on the microphone, I either have a plan or I don't. And if I don't, I say I'm going to be patient, and I am patient. I wait until the trades come to me. And that is a complete game changer. So if you find yourself getting kind of chopped off the open, try it. Just wait. Red Dot 9914. You've got the t-shirt for this week. Appreciate your comments. And as for anyone, all you have to do is just leave a key takeaway. I try to pick different people each week. Not always the case. So some of you guys end up with 2 or 3 shirts. But all you got to do is leave your key takeaway. What did you learn? What was an aha moment for you? Put it in the comment section, and I pick a winner each week, whether it's a shirt, Icon Meals, scans, IU, you name it. It's not that hard to do. And then last week, I announced, a pretty big deal, given our partnership with Centerpoint, Clear Street, a deal that has never been done before. Typically they might give 50% off commissions and different deals like that. But it has never been done before. 60 days, 0 commissions. And on top of that, giving the bundle, giving the quarter of IU, giving the edge for 3 months. And it's really been a success so far. I hope that you have taken advantage of it. I hope that you've at least checked it out. Because they've been a leg above the rest for quite some time, and they really reinvested into themselves over the last 6 months, I would say, with the locate program and just with their service offering with Edge, and it's just a notch above, like I said. So again, make sure you check it out. The link is in the description. It's also in the blog post. And I hope you take advantage of it. You've got 1 week left. It ends next Sunday on Sunday Video. So we were doing it for 2 weeks. And then I'm going to do like a little short intro and then kind of switch over to maybe showcasing a little bit of stuff on the video, on actual screen, just to kind of further drive home the point that I'm making, so you can kind of see it visually, because I know sometimes I can say it, and then you pull up the chart and you have no idea what I'm talking about. So I'm going to kind of briefly describe what I'm going to talk about. Then I'll go into it on the screen, and then we'll get right into Sunday video for the week ahead. But like I said, this week I'll be traveling. I'll be off desk Monday for sure. There's a fishing trip. And then Tuesday, Wednesday, I should be there for the broadcast at least to, at worst case, at least type out what I would typically say in a broadcast, if not grab the microphone. So, and again, I think the best way to attack this market is just without an aggressive bias. I think that a lot of people have trouble trying to force, if they think it's going to be bullish or if it's bearish or if it doesn't make sense, the rate's this, CPI that. And I think that with so much indirection, we've been going steady and then it just fails and it rebounds the next day. And it's better to come and just be a trader. And I think that the ones that are struggling are trying to force a particular thesis, a bias one direction. And we're in a trader's market, and we've been for quite some time. There was definitely a nice swing market over the last maybe 3-4 months into January, I would say, January into February. And I think it ended with that AI. I think 2 weeks ago I did the video that I felt like things were changing. And you've seen that. You've seen it change. And you've seen the market come back. And you've seen kind of that peak euphoria that we talked about end. And a lot of those crazy overextensions have all started to fade back down. And, just being aware of that is half the battle. So hopefully you guys were able to be prepared given our conversation about it. And it helped you attack the market in the right way. Or at least avoid it if you were unsure. One of the problems I think a lot of people have is they just kind of come in and try to force whatever they're thinking. But in this market, it's just let everybody else do all that heavy work, wait for the trend to form, and then come in. Stay out of the crowded stuff. And then the main point I think that I wanted to talk about for today's scan is just understanding, kind of where have you seen this stuff before? Where, what does the typical trader, retail trader, how does their mind work? And an example of that is just LUNR, right? LUNR was a huge squeeze this week, went up to 130 before it crashed down to 19. And so as it's going up, everybody says, hey, it's the next HKD. Well, if you remember, HKD was like kind of a beast of its own. And nobody had ever seen anything like it before. And nobody was prepared or thought that it could do what it did. And this kind of relates back to CVNA when we talked about that day that it had circuit halted and went crazy. I had mentioned that, everybody's already thinking that this is the next Clove, AMC, or, GME. But when AMC and GME and Clove and all those names were going, nobody had ever seen anything like that before. Nobody was prepared. And so what happens is when everybody is kind of prepared or afraid of that or kind of thinking in those terms, they rarely do the same thing. And as you saw that day on CVNA, it went from 18 all the way down, what did it go? Like 1190s after hours or something like that. We had that huge unwind, but everybody had such high conviction that it was the next AMC. It was the next one that's going to go 30, 40, 50, whatever. It's possible, could have, but as soon as it doesn't, that whole trade, that whole long bias, that whole crowd is going to end up unwinding in a big way. And you saw exactly that. Same deal with Lunar, LUNR, right? Everybody's like, this is the next HKD. So now it makes sense to chase it at 70, 80, 90. You're getting rewarded for being reckless. And then it goes to 130. But you're holding at 130 because you want 2, 3, 4, 500 or 1,000, whatever you want. But no, everybody's already prepared. Everybody gets so long biased. Guess what? Next day unwinds down 75%. So thinking in terms of that, people start to see things start to pop up. As a short seller, you've got to be kind of one step ahead, maybe hands off. OCEA starts running, starts to go. Oh, this is the next LUNR, right? So quick to forget that Lunar just dropped 75%, but guess what? OCEA, yeah, that's the next lunar. So now, yeah, it goes 5 to 7 to 10. Well, it's still cheap at 11 and 15 and 20. And everybody's holding. They're not selling because they just saw lunar go nuts. So everybody is patient, right? Everybody's long and patient. So as somebody that's looking for the short, you have to kind of play that into your thought process. It's not gonna just go squeeze out once because they've pretty much convinced everybody just to hold, stay tight, because hey, guess what? This is the next lunar. But no, it's not. But you don't know that until it starts to fail. So yeah, it squeezed out to 28 and it gapped down to, basically, I think 13, 14s or so. It would have been nice to capture that, and some people did. But, if it went to 30 or 40, we wouldn't be having this conversation about those people that caught it at 28 or 27 or 25. There was edge, though, after. When it went up to 16, 17, exhausted, and, ended up going down towards the single digits. So again, same kind of situation. Everybody is already confirmed and agreed that this is the next XYZ. And so being able to, see that is going to help you because you don't want to be on the same side of the crowd. But on that same note, you need to let that crowd move on. Otherwise, your risk is elevated, right? Especially after a big move. Nobody wants to sell because they all want to catch the next one. So as a short seller, you need to remember that most people, the average retail trader, in their mind is thinking that they're in the next XYZ and it's going to go to the moon, and they're not a seller. So you have to build that into your game plan. It's going to probably go one more push and then maybe even one more push. You have to let that other trade come out, that crowd come out, and then let it pull back, let it confirm a few times, and that's when your edge comes back. Everybody's always afraid to miss the backside, but it's better to be on the right side than the fear of missing the backside, because you don't know, are you going to be 5, 10, 20 too early? We don't know that. So that's one big thing, and trust me, as somebody that has been trading for quite some time now, that was very difficult for me because you never want to miss the top. But the best thing to do sometimes is miss the top. And anytime that I do trade front side, anytime that I do trade into that, it's never size. You never want to be even a percentage of your, if you're going to trade the front side, it's got to be, 10, 20% max. Because you have to have that buffer. You have to have that room to be wrong. Because at the end of the day, you don't know. And in this market, if things can circuit halt, it's not really worth it. It's really not worth your time. It's just a pain. And at some point, one will catch up. And all your hard work will be gone. So then, taking that into consideration, knowing Lunar was hot, knowing OCEA was hot, right? The next one that kind of fits the ticket for the next was BAER. BAER kind of ramped up, came down, ramped up, came down. One thing to consider is all the action before 7 a.m., in my opinion, maybe I'm wrong, but in my opinion, is kind of that short generation. Like they're generating shares. They want to make it look attractive to shorts. Shorts start to come in, they start to put more shares in the market. Pop it back up, let shorts win. Pop it back up, let shorts win. After 7 a.m. is when most of the retail traders start to trade, right? Most of the sophisticated traders can trade 4 to 7 a.m. Most of the retail traders can only trade 7, 8 a.m. plus, right? So I like to assume that prior to 7 a.m. is sort of them trying to paint a picture that maybe it's weak, maybe chop it around to kind of create the picture that it should be shorted and try to get shares out into the system, right? Because as they push and it fails, push and it fails, push and it fails, they're getting people to get interested in fading it back down. Yes, it just went from 8 to 7. And then it ramped up to 750. Then it faded to 7. Then it went to 750 again. Then it faded to 6, right? Stuff like that. And you're winning, you're winning, you're winning. And then when it pops back up, you know it, you should short. But that's when they start. After 7 a.m., That's why we always look for that sub VWAP trap. And when it catches and it starts to catch, and now instead of going ramp up, fail, ramp up, fail, ramp up, fail, now instead it does flush and it gets caught. Flush, gets caught, and it continually goes higher. That's when the trap starts to form. They've already got some prior to 7 a.m. Now, after retail can sell, let them sell if they want. Once that pressure is gone, they swipe it up. And that's exactly what you saw, and that's why I liked BAER long versus those 550 levels. And that was a killer idea. I definitely should have doubled up a few more times, but it worked out perfectly. Actually better than I expected. And the key level, 720s, was perfect. And so hopefully you're pulling up the charts when I'm talking about these. And I will go over it a little bit as well. And then the next two things that I wanted to talk about was, for example, LHDX. And so that had the FDA news on Friday right at the bell. Perfect alert by TradeHawk. It was 16 cents. I am still long that at, I think, 16.42 average. And I sold 75% of it, maybe a little bit more. I did not expect for it to go to 40 cents after hours, but regardless, it was a huge move. Why was I interested in that? Why did it make sense? Why was it good risk to reward? LHDX filed for bankruptcy the day before. It's at a chart low. It's at a 52-week low. It's under 20 cents. We just saw SRNE. We just saw SRNE just the prior week, just this week. And now it's SRNEQ, as you guys know. So when companies file for bankruptcy, you've got everybody just, selling. It's done. It's at a low. All of a sudden, next day, there's FDA news. It's going to be a momentum play. There's going to be people on the wrong side. There's going to be people short thinking that it's a zero, right? So there was a huge opportunity there. Chart bottom, risk maybe a penny, two, for the potential of, let's pretend we don't know that it went to 40 cents, but really, you're risking what, a penny or two for the potential of 5 or 10 cents up? I mean, that was what my thesis was, thinking that, it could go maybe 20, 25, 30. Huge risk reward. Perfect trade. So really understanding, where have you seen this before? And that's really half the battle. Where have you seen this before? Then next up, I was talking about AMAM. We talked about the channel and I'll get into this in a second so you can see it visually. But 580s to 630s throughout the day. Baiting against 630s, 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 630s. Guess what? Pops over to 640, consolidates, they absorb at 630s. That is the tell. They soaked it at 630s, and guess what? If you didn't cover, game time. And it swipes up, clears everybody out, comes right back down. Use those levels to your advantage. You have to build that in on crowded trades. We saw it again on Friday on Timber, TMBR. Same concept, same thing. Always ask yourself, where have I seen this before? And treat it like you've seen it before. Treat it like that trade because it'll keep you safe. Maybe it's not always going to do that. But when it does do it, you're going to be happy because the setup's there, the situation's the same, and you don't want to step in front of something that's super, super crowded because, maybe you're eventually right, but that doesn't mean the next 10 or 15 minutes won't stop you out, won't cost you your day, won't cost you your month. I'd rather be a little bit late to the trade than have to compete with everybody because when there's a crowd involved, that move happens fast because everybody at the same moment realizes the same thing. It's up to you to figure that out and see that, hey, guess what? This is just like AMAM yesterday. I need to be cautious. This should have stayed heavy. But instead on Timber, on Friday, 290s, it kept on kind of tapping that 290s and fading off, but it kept on getting caught, soaked. And if that 290s were to lift, what's it going to do? Swipe, just like AMAM. Blow everybody out, and then start to come right back, kind of like a mean reversion, right back to where it came from. So I've always given a bunch of examples. That's what I would suggest that you do as well. All right, let's switch over to the screen and we'll go through Sunday watch list as well. As always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. So if you're looking to be told what to buy, you're in the wrong place. If you're looking to be told what to sell, you're in the wrong place. I'm sure you can find that online, but that's not what we do. My goal is to kind of showcase what makes good edge, what makes a high probability trade. And hopefully you're able to see that on your own and identify the setup and be able to participate in a capacity that makes sense. All right, so like I said, I wanted to go over a couple more things before I get into the Sunday video. OCEA. We talk a lot about a sub VWAP trap, what to look out for, right? Now, it doesn't mean you're going to trade it perfectly every time. I shorted a little bit pre-market, then I covered, and then I unfortunately missed the entire backside of the move. It is what it is. And I wasn't going to chase it down, and then I had to be off desk for a little bit when I wanted to get the 16-17 blow off. But I didn't force the trade after that, and you know that's fine. But what I wanted to kind of go over is what we talk about every single Sunday and how you can apply it to your own trading. So for example, OCEA, we talk about the sub VWAP trap. So you get this first huge move, everybody gets excited, like, all right, just ramped up, I can short it, I can fade it down. Starts to ramp up, fades, looks like nothing's happening, and then it starts to slowly grind up over VWAP, and then you can see the wicks. We always talk about these wicks. So you want to assume that it might have a little trouble, in this 610, 613 range, right? Because that's popped up, fail, pop up, fail, slam, right? So now you want to assume that it's probably going to have trouble there. Well, if it ramps through, sits back, and starts to form a base there, what do you think is going to happen? There's probably going to be a lot of traders on the wrong side, starts to really churn up. You can also see the volume starting to come in. So that's a perfect example of the sub VWAP trap that we talk about. And then the next one was BAER. And obviously this was a really fun one. I definitely underestimated as far as the long side. I was there. I had a 570 average. I made it pretty far, but again, unfortunately, I missed out on a pretty sizable trade as far as if I had just held it into the open. Why was I interested? I talked about the 4 a.m. to kind of 7 a.m. sort of trapping action. This right here, it kind of looks like it's like somebody's trying to push it up and they failed. Somebody tried to push it up again and it failed. It probably some newsletters, some pumps, whatever. And obviously, there's no momentum. So it looks like a good fade, right? Exhausted out, came back, stuffed into VWAP, same deal, stuffed into VWAP, came all the way down, flushed everybody out. And then guess what? After 7 a.m., it started to firm up and come back up. After 7 a.m., that's the key. That's when all retail, if they wanted to sell, they would have sold, right? So you can assume that most of this action is either some random chasers or kind of shorts, maybe just taking a little bit at a time. You don't need a lot of shorts when you have a very low float type name. What I look for is these wicks. Ramp up stuff. I want to see the opposite, right? We talk about a dip and rip candle. You got the dip and a rip. Dip and a rip. Starts to grind up. So that's when I started to get interested versus the 550 level. I scaled into the trade 570s, scaled in again at 6, all the way up. I think I tried to actually scale at 720s. I was a little bit too, I was being too cautious. I wanted a little bit lower maybe. And it went to like maybe 717 and then 720 swiped and that was it. So you can see my trade. It was fantastic. I ended up flipping short off the open and faded it down throughout the rest of the day. Ended up being a great trade both ways. And this is another nice clear out type move and a great example, I guess, while we're at it, of, looking left. Where is a potential clear out spot? Where is it likely going to run into some congestion, some prior sellers, some type of spot which might make all the prior shorts that maybe didn't cover after you can see it clearly is basing and right here basing, right here basing, all these higher lows. If you ignored it, then you're probably going to get blown out if you're oversized. So a perfect example of the clear out move on that one. And then the last comment from before that I wanted to discuss, and again, this is all real time. These are not hindsight discussions. It is right now, but I'm sharing this with you because this is what we talk about. This is what we talked about in the lounge, in the room, to get prepared for this. Because if you don't see this kind of stuff, you will be part of these crazy candles. And so, for example, on this AMAM, high conviction trade for me. I really, really wanted to get there when and if 580s stuffed and failed. But each time it came to 580s, it absorbed. So we were talking about it in the lounge, and Lone Wolf, which is one of the members, had posted his chart, and he was there at 580s. And it made me smile because, they get it. They get it. You have to be proactive into those levels. You can always rescale. And so the more that it goes up against the ceiling, 630, 630, 630s, you get convinced that's the top. Well, what happens if that top then breaks, right? Comes back, stuffs, dip and a rip, dip and a rip. You can see the wicks that we talk about. Now, all of a sudden, 630s is actually absorbing size. Now what? You have a very small window to get out before everybody realizes that they just made a very big mistake. And maybe they should have been proactively covering into 580s too. Blow everybody out. Mean reversion comes right back to that level. And you saw, again, it's not hindsight. And this isn't an I told you so. I'm trying to show you that you can see these things ahead. Maybe it's not going to work every single time in this capacity. Maybe sometimes you're too careful. Maybe it would have been perfect and you should have stayed short. But it's going to prevent and save you from getting blasted out on a trade like this. And so I had mentioned that when it went into the circuit halt, I said to look for the mean reversion right back down to that 6 to 630 level. And that's exactly what happened. And then one step further the next morning, and you saw my trade on Friday, what information can you use from the day before to help support and validate your trade on Friday? And we knew that 580 was the base all day. So if it's coming from under that, 540, 550, and it ramps up to 580s, where do you think that there's going to be a lot of resistance? Now, again, you can't assume, because if you assumed at 630 that was the dead top, then you'd be in trouble. But you can't assume that 480s is, but you can start in, scale a little bit up to maybe 10 or 20%, and then scale in as the trade confirms your thesis. And that's exactly what I used for the levels on Friday. As you saw, I posted that trade. That said, we saw the same thing on Timber. Timber, same deal. We're starting to get the ceiling at 290s. So it's obvious 290s is the top, but why is it getting absorbed? Number one, we've got a base here, and I also had mentioned that. Again, it's not I told you so. It's pay attention. Pay attention to what they're telling you. And you saw that low 250s was absorbing. Every time it came down to 250s, they absorbed it. Came down again, absorbed it, right? So you should be there proactively covering. And then as it firms up over VWAP, you've got these two candles over here. Dip and a rip, dip and a rip. We've checked in with VWAP right here, right here, right here. And now we're starting to firm up. And guess what? Everybody that says, yeah, it's obvious, 290s is the top, they get blown out. What happens? Mean reversion back down, just like AMAM. So keep that in mind when you're trading this week and forever. These tools, these types of situations, being able to identify these ahead of time keeps you out of trouble. It's fine to be there. Just make sure that you're not oversized. Make sure that you're not high conviction when maybe you are right. But what happens if you're early? for 10 or 15 minutes. Yeah, you were right in the end, but just because you were right in the end doesn't mean that you made money on it, right? So be aware of that, be patient of that, and that's what I wanted to talk about. Now, let's get into Sunday scan and the week ahead. So, now, LHDX, like we talked about, we just saw this on CRNE. We just saw bankruptcy play. We saw coming off literally the same almost penny and where it could go, right? This went up, I think, to 60 after hours, but we saw it go from 16 cents all the way up to 40 cents. So that's fresh in my mind. We have a bankruptcy play, and then we have FDA news after hours, and in my mind, I'm like, all right, this is Monday's 4 a.m. like ripper, right? So I got involved. I got long at 16 in change. I added some. I sold some, unfortunately, 22 to 25 cents and more at 40 cents, but I held the rest over because my thought process is it could have a wild 4 a.m. open. That said, if it has a wild 4 a.m. open and it blows out, I'm going to be looking to fade it back down as well. So higher the better, failed follow through, currently long. I will be selling that, and then I will look to flip short. That said, I probably won't be trading on Monday beyond that exit. So if I was on desk, I'd be looking for exhaustion move, failed follow through, look to fade the trend. Now, CVNA, beautiful trade, beautiful unwind. There was a point over here where I got too aggressive, and I didn't want to ruin my Friday before I took off for a few days. You know how that works. And so I got a little uncomfortable because I asked myself the question, if this swipes up, am I okay? And I was highly confident, very, very, very high conviction that this was going to go down to the sevens. Now, had this just kind of peaked out a few times and then flushed out, I'd still be there with size. But this area over here, I started to notice that we had this kind of base happen at 840s, right? So I sized down at 830s on one of the flushes just to give myself the buffer that if it wanted to swipe up, that's okay. It's not going to ruin my day. And if it starts to fade off, I can always rescale and start to trade that more actively. So we ended up having that nice fade. I ended up rescaling in, not as much as I had, but I think it's an important point because no matter how high your conviction is, if the edge starts to diminish, you have to adjust your size. Otherwise, maybe you get paid out, but if you don't and it swipes up, you knew better. And that's really the thing that you have to take away from this, because a lot of times we get paid out for being reckless, but we don't associate it with being reckless until it catches up to us. And then all of a sudden we look back and we say, the writing was on the wall. I knew to get out. I knew to size down, and I didn't. So to me, that was really a good trade because I was XXXXL size. I was highly confident that we were going to be just like W, had that full day unwind, which we did, but maybe I was a little too aggressive too soon and had that circuited up and gone 30 cents more and maybe 30 more cents. I mean, it wouldn't have been a disaster, but it definitely would have been a ding on my day, and I would have been probably a little frustrated that, you know, I've been trading extremely well. I'm heading off to St. Thomas, and that's how I decided to spend my Friday. So that was that. That ended up being a fantastic trade. Ideally, we get some sort of gap up and then just slow, steady, failed follow through. Be cautious having too much of a bias. Go with the flow. That's been kind of the key all month. Just go with the flow. Don't try to force a trade to do what you think. This laser thing is starting to interest me quite a bit. Great volume. As you know, I don't like low liquidity crap. I don't like trading low floats. I don't like stuff that can just go into a circuit and all that stuff. If I do trade those, it's small. I don't trade those things like I used to. It's just not worth it. At some point, they will catch up to you. I want high volume, 20, 30, 50, 100, 200 million shares. You know, AMC, laser type stuff. I'm focused on this action right here. So, week open, potential rally red to green, or gap up, potential failed follow through. I'm interested because it's traded over 120 million shares the last 3 days. So we've got a nice breakout. The thing about these types of trades lately is sometimes they go up to that key level, right? So it's clear that there's resistance here. If they blow through it, everybody's going to say this time's different. It's going to force a cover to come in, and then I want to catch the backside. A lot of times you'll see them clear out key levels, and then, like DraftKings, we bust through this level. Guess what? We're all the way back. Fantastic unwind. I really fumbled this trade. I had a nice short. It was an A+ setup. You guys saw that day on the exhaustion move, but unfortunately, I don't swing these things short, and it was just beautiful every single day. That said, same kind of concept. Let's blow through some resistance, cause a cover to come in, and then look for the opportunity. If you force that trade on the front side, you risk being there too soon. You risk getting squeezed out. So just be cautious of that. And then FSLY, just gonna kind of keep an eye on it just in case. I'd like to continue to fade this down, maybe back down to the 10 level. Not the 10 level, the 12 level is possible. Kind of same situation as DraftKings. Look, if the market bounces, throw that idea away. If the market stays heavy, I think that this will stay with some decent pressure. Then, let's see. We've got failed follow-through setups. So failed follow-through setups, the next section. Typically what I'm looking for is some sort of morning move, exhaustion, let the crowd kind of move on, and then look to potentially fade back. So that situation, BAER would be a goal there. Ideally, we have some sort of move. And let me just pull these off for a sec. Usually what I do is I kind of look left as to where I'd like to trade it. So an ideal exhaustion zone would be anywhere from 830s. Ideally it gaps up 830s, VWAP 850s, 850s to 950. Somewhere into that range. Ideally it just rushes through, circuits up even, would be great, but blows everybody out and then starts to kind of fade off, and I could see this continuing to fade back down. Timber, same deal. I'd love to see it kind of push back up, push on 290s, and then possibly unwind. I feel like it was a crowded mess. I think they blew everybody out, but I'd like to see them do one more push out of the shorts and then potentially unwind from there. AMAM, we'll see. Trade came. The catalyst came. That was at noon. The presentation was out pre-market, so that's why I went ahead and took that trade a little bit earlier. But ideally, we get some sort of gap up, 550 to 580 blowout, and then starts to fade off from there. ATLX, perfect opportunity on Friday. The goal on scan the night before was either gap up or some sort of red to green reject and failed follow through. This whole run up, they were going to ring the bell. They rang it that morning, and then that was it. Well, what's the next catalyst? There isn't one. So we had almost a circuit halt. I didn't want to get involved in that. I let it come back down, and then you saw I started to participate on the short side and ended up fading at almost $6 per share. Killer opportunity. What I'd be looking for in the morning, ideally, maybe into the 1530s up to the VWAP level, something like that, into the 1630s. So in that range, exhaust out, look for resistance to start to come in, and then I'd be looking to fade it off. Other than that, just some other ECX I'm watching just in case we have a T+2 sort of event. We had 3 million shares, and then we had 56,000 shares traded. So if there's shorts left and there's a buy-in, this could potentially push. Nothing I'm excited about, but potential. Grill, again, just something I want to stay familiar with. I'm not going to long it up here, but it is checking all those boxes. All those wicks are getting absorbed. This could continue to break out. Pretty impressive rally. BNTC, just keeping an eye on it just because the market does like cheap ones lately. If 30 breaks and it starts to ramp and it has 10, 20 million shares, I'm interested. If not, forget it. GNLX, keeping an eye on it. For obvious reasons, it's starting to overextend. Just because it's up 4 days in a row does not mean it's a short. But I want to stay familiar with it to see if we start to get some sort of crazy move to take advantage of. And last but not least, NRSN. This is an example of, You know, we've got that 82 million share volume day, comes back, dips start to get absorbed. You could maybe say this was a trap day where it ramps up, sits back, and then from that point forward, they keep on absorbing dips. So I'd be watching, especially if it gets over this 220 level, we could be having a nice little breakout there. So I'd watch it versus the 170s level. No position. I'm definitely interested in the possibility. It reminds me a lot of TCBP, if you guys remember that one. Same sort of continuation type trade. And again, we talked about this quite a bit. They had that catalyst on that day. I still had some left, but like I said, in the days leading up to it, you're up $3 per share. So make sure you're locking in. Same kind of situation where I look for the volume and then look for the bid to come back. Could this have kept on going? Sure, but obviously it didn't. NRSN, same sort of thought process, mentality. There's obviously a buyer on the tape, but again, no position at this time. I would be looking to potentially swing it, but that's it. So have a good rest of your weekend. Again, make sure you check out the deal that we have with our partnership with Centerpoint. There is 1 week left on that. If you have any questions about joining IU, reach out. Webmaster@investorsunderground.com. Hit the live chat as well if you have questions. And that's it. Trade well. Hopefully you enjoyed the visuals of these little things that will help you, because as you see them happen during the day, you're going to be more aware of them, and it's going to get you out of that chop, because most of us don't really have a problem finding the right trades. It's getting taken out in that 10 or 15 minute kind of crowd. It's a good word for it. They just clear everybody out in the crowd, and then the trade comes. And if you're part of that clear out, you miss the trade. You either have a loss, you come back and you maybe break even, or you wait. You let the crowd go away, and then you get the trade. So anyway, that's it. We're right into March this week. So again, make sure you're checking the boxes on what you wanted to do in 2023. We're still early in the year. If you're not any different than 2022, there's a problem, right? And like I said last time, if you're going backwards right now, just hit the pause button. Just wait. You should either be, flatlining or nailing it in the volatility. But if you're going backwards, recheck in with what you're doing, and reevaluate whether you're just pushing buttons, whether you have an edge, or whether or not you should just hit the pause button. So, see you guys in the room this week.